morning. Welcome to Viewpoint, your program of personalities, politicians, and perspectives. And we sure do have a great personality, and we sure got some perspectives this morning. Thank goodness. Oh, but speaking of politicians,
please.
Tomorrow is the day we have a very expensive election due to the stupidity of one of our retired congressmen.
Listen, don't hide your light under a bushel, Bill. Just say what you think.
Well, it's just so uncalled for. Just what a disappointment. What a true disappointment to those of us. Anyway, you wanted to make a comment about the election tomorrow,
well,
Mr.
I just
Busby.
hope people don't...
10 seconds is up.
Thank you. I hope people don't forget, because they're planning on a total turnout of 4 people, I think. It'll all be out at Jefferson Street Christian Church. They're doing it a little differently because they're cutting down on the actual polling tables, stations, whatever you want to call them. But please don't forget to vote. The hours will be the same. It will start at 6 a.m. and end at 7 p.m. Please go. It matters. Whoever wins this, whether 4 people vote or 4 million, they're going to represent you in Washington, and God knows we need something.
Well,
some
once again, I fear that Logan County will succumb to that dread disease called voter apathy.
Yep.
It's just it's mind-boggling to those of us who are involved and interested in our government and try to do the right thing and show up for school board elections and church board elections and all that, to have the people just turn their back and say, well, what the hell. You know, it's a disgraceful.
It's that old business about, well, my vote doesn't count. Anyway.
Yeah, right. Mr. Short, we do have, because we're going to have a formal introduction for you, just if I ever get around to that. We have a practice at Viewpoint of you don't get to listen to this because you're a working lady, but I do want you to know that our Nielsen ratings are very good. Very good.
Impressive.
There's a family of Nielsens out there by Burtonview. and we hear from them all the time. Judy gets all the accolades. I don't get much, thank you very much.
Piffle.
Well, in any event, we do try to start with the kudo, and I think, Judith K., we're going to just kind of switch, and I would suggest to you as a co-host that it would be very appropriate to extend a kudo to our guest this morning, because she just jumped in there at the last minute due to cancellation. And so we appreciate that very much, Mrs. Short. And having said that, I'm going to ask Judith K. to introduce you on a personal basis.
Yeah, and as I told you in the car on the way up, it's rather fortuitous, because I was feeling kind of badly that we were that we were so booked up, because I thought, doggone, this volatile market is something that needs addressed, and I'm so glad you could come to address it.
Thanks for having me.
You know,
who is our guest?
It's Christine Short of Edward Jones. Now the bottom dropped out of it, and now it's working very hard to pick up what it lost. And I think many people, many more people than used to, are involved in the market, because you know, you can put it in the bank in your savings account, or you can stick it in a sock between your mattress and box spring, and you get about the same interest. So the market's the way to go.
That is true.
And I'm so glad that you could be with us, Ms. Short.
Thank you
and tell us a little bit about what in the name of thunder is going on here with our global financial crisis and China's terrible problems.
She's going to solve all the market fails right here. Nothing like a big question
to start off the morning.
To market.
You know, I think there is really a combination of things that are happening kind of all at one time that are making people a little nervous. The last month, we've seen about a 10% pullback, right? A 10% correction, which is actually pretty normal. It's been a long time since that's happened, and I think people have kind of forgotten, because we've had the last 3 and 4 years where everything's just seemed to go straight up. right? A 10% correction in a year is pretty normal. And it's been several since we've had one. And there's a couple of things that we think are worrying people. Combination of China, like you mentioned, some slower growth there. Oil prices being really low.
Yes.
And then, of course, just kind of the threat of interest rates starting to go up, short-term interest rates by the feds. So you put all of those things on the table at once, and we've seen some volatility.
Now, the interest rates going up, that means if you need to borrow to buy a car or get a home loan, your interest rate's going to go up. But conversely, if you have a savings account, your interest on that would go up too. So there are two sides to that, right?
There's a couple different parts to that, you're right. And so with the lower rates that we've had, also encourages spending, right? So there's, like I said, several factors that are all kind of at once. We are looking at things as this short-term volatility also provides some good opportunities, really, for some quality things that you've wanted to own, right? Whether it be stocks or mutual funds or those sorts of investments, really being at a discounted price in a sense.
Bargain
right?
basement.
Yeah.
Yes.
Christine, I'd like to address the Edward D. Jones modus operandi, their philosophy for investing. It's interesting, and the reason I mention that is when your predecessor, Mr. Neal, came to town 40 years ago and opened up an Edward G. Jones agency office. And we now have, in this community, 4 different Edward G. Jones offices.
Correct.
Now, there's a reason for that. So tell us a little bit about the Edward D. Jones philosophy of doing business in the market.
Sure. You know, as a firm, we're obviously our job is to help the long-term investor, right, by quality sorts of things that will help plan for a specific goal. So whether that be retirement or helping someone plan for college education or maybe something more specific, right, and to use really what a specific person's goal is combined with their risk, how fast they want to drive, and then providing the quality sorts of investments to help them get there. And I do think that there's a real need for that, and by having 4 different branch offices in town, we're really showing that it's needed.
Yeah, you mentioned how fast you want to drive. I think it could be pretty well generally accepted that in counties like Logan, there are very few sophisticated investors, people who study the market religiously and can pretty well do on their own if they would without a broker if they so chose. But the service that you're offering, the Jones service, for want of a better word, is for those of us who are not sophisticated, but have a desire to be more sophisticated and learn. So, in essence, you're helping us learn as we invest our money.
I think a combination of that, as well as, you know, there's a lot of pieces to the puzzle. You know, I help a lot of people in those kind of early retirement years. We're not only planning what investments are appropriate, but kind of that long term, how does it all work together? Social Security, how does, you know, that fit into the puzzle? Pensions have become less common, right? And so how do you make things last with all the parts? How do you protect what you have? How do you pass it on to the next generation? So all of those pieces take some planning, and there are definitely people who need help with that.
Well, we all know that there are people who play the market daily.
Right.
They're
and that's
traders.
not us.
They're traders.
Right.
That isn't your clientele at all.
I've said that often. We're, especially with this volatility and things that are happening, it's easy to get nervous. And really reassuring people that we're not traders, we're investors. And what happens on a single day or in a week's period of time doesn't change someone's long-term goal.
Right.
And it's easy to get wrapped up in that, I think.
Is it up to the client to establish what their long-term goal is, and then you try to fit a program that will reach that? Is that how you operate?
I think that's a good way to put it, yeah. Because we have a lot of conversations then about what someone's goal is. Is it retirement? Is it, passing money on to another generation? Is it, just the day-to-day living in their retirement years? And then how do we get there? Right? What investments match that? Investments, I feel like, are kind of the second tier.
I think for me personally, it would be that I could get the rest of my years under my belt here without leaving debt, In a perfect world, I'd like to leave my children something, of course. But what is the approach or the goal of most people? Would I be representative of a lot of people?
Absolutely, yeah. And there's a lot of that where it's, not only what's happening right now, how are all the parts working together to get you through your retirement years, but what am I going to, I'd like to leave something to my children as well.
Sure.
And how do we make that happen?
Right. Now, you said that this correction is good, but when you get up in the morning and you see how it's correcting, do you bite your nails?
She has 3 challenges the first thing she gets up in the morning.
Yes, right.
Being a busy young mother.
They're called Mallory, Preston, and Taylor. Those are my challenges.
And your children are what age now?
They're 8, 6, and 4.
Little people.
They are little people.
There's a busy mother. And then she goes off to a busy day at the marketplace.
It makes for a busy day, that's for sure. I definitely relate to that because that's my first concern is not necessarily, 2 weeks ago on Monday when the Dow dropped, about 1,000 points
1,000
in the open.
points in the first 30 seconds it was open or something.
It definitely makes you, kind of scratch your head like, okay, this is going to be an interesting day. But most of the clients that I work with, we've talked a lot about the possibility of a correction and that the fundamentals really are still good of the market in general. And when we look out, like I said, long term, I like people to kind of picture what money can almost be separated into like these categories. What do you need in the next year? What do you need in the next year to 3 years? And what's longer than that? And when things go out in that longer category, we really can't focus on what's happening on these daily ups and downs. And we do think there's going to be some volatility. Like I said, with the lower oil prices, some slowdown in China, and then the interest rates, the threat of rising interest rates from the feds, all definitely play into the picture. But there's also a piece of the media that kind of plays into, I think, people's fears. And a lot of people still remember 2008, and there's some worries there.
Always.
We just keep trying to tie back into what is our long-term goal. It's not what happens today or tomorrow.
What about this China business? How in the world could they have that dramatic effect on Lincoln America?
Well, I'll tell you, there's an article in the Courier this morning. That's another media, by the way. Where it applied, talked about we shipping cattle hides over to China.
Cow hides?
Yeah, hides. Yeah, right.
Okay.
That would be the skin.
Raw leather?
Yeah, the raw leather. And they make billfolds out of them, ship them back to us. So,
You're right.
So that's a very minor way in which China's involved in our market.
It's just
That's
hard.
the lowest common denominator.
It's hard to go to the store and find something that doesn't have a sticker on it that says "Made in China."
Yeah,
Sure.
it is.
When I was working at the hospital, Lincoln Christian University had a group of, I believe it was 50 youngsters from China who had come here to see the university and this little corner of the world. And they all came in to the gift shop, and they were so excited about buying something in America. However, as I said, go to any store. A lot of it's made in China. So, what happened to them that they had this dip? How did this work?
Growth is slowing, but I believe it's been the last couple of years, growth in China has been somewhere around 10%, and they're saying it's slowed to about 7%. So I feel like it's a matter of putting things in perspective as well.
That's not really like tanking.
Correct. One of the things that China depends on is their demand for commodities, and that's slowed substantially. So that's one of the pieces that has affected their economy in general. We definitely by no means think that they are slowing to the point that it is affecting things quite the way it has been.
Okay.
Okay.
The slowdown is slowing down?
It's right. The slowdown is slowing down. But there's definitely been an effect there, and we're just kind of waiting to see how big that effect's going to be.
And Judith, Kay, and Christine, while we're sailing the China seas, we will make port for just a few minutes while Mr. Ash pays obeisance to our, this is a commercial world, you know. Thank you, Jim. Well, welcome back to Viewpoint, the program of personalities, politics today, and perspectives. And as you've already understood, we have a great personality this morning and perspectives about a bit of commerce that memory, a little research tells me, that started back in the middle of the 13th century. And apparently the beginnings of the stock market go back that far, and that's a long way. The Venetian bankers, those rascals, they're always into this thing, started trading in the mid-13th century in government commodities, government securities. That's an interesting observation.
I'm learning something
Thank you.
new.
Thank you, Google, for getting that fun. All right.
What's going best now? How are the like municipal bond type things as opposed to the regular stock market things, buy in Firestone tires or something?
I think, one of the important pieces is that fixed income always, or most of the time, has a real place in people's portfolios, and we've seen that in the last couple of weeks in particular. If you invested 100% in the stock market, the last 2 weeks may have felt a little rough for you.
You'd
right?
be under the bed whimpering, right?
Your knees begin to buckle.
Which is why we almost always recommend some sort of fixed income as a piece of a person's portfolio, just for that diversification more than anything. I think over the last, I'm just gonna even had a number here. Over the last, I don't know exactly how many years.
We'll just say little while then.
Over the last little while, that's real exact.
That nails it down.
But if you had invested, here it is, since 1945, if you had invested in just the S&P, you would have an annual return of about 12.7%. if you had a mix, 65% stock, the other 35% fixed income, more like a 10.6% return. So the idea is, in those times of volatility, to have that fixed income piece helps with the bumps a little. But really, when it comes to the big picture, your return ends up being not far off from a pure equity standpoint.
You were talking about the gas prices, and other than in Lincoln,
Yeah, we've noticed that.
truth is truth, James, okay? Where they're making people cross, the gas prices are way down. Now, you said that has quite an effect on the market. Can you kind of expand on that just a titch?
Lower oil prices, obviously in specific oil companies, has not been positive, but for the consumer, spending less money at the pump allows for more money in the pocket to spend in other places. So lower oil prices has been advantageous when it comes to the economy. However, when it comes to oil companies or investing in oil companies, we've seen about a 50% decline since last year.
Because?
Well, a couple of different factors. One of them being the supply and demand is the basic answer, right? An increase of supply has really affected a lot of those oil companies individually.
Now, Mrs. Short, if customer A walks through your front door and I want to invest $100,000, the first question you're going to ask him, I presume, is, well, what are your goals? And you take it from there.
Yeah.
So
we usually sit together and do exactly what you said, just have a good conversation about what is it for? When do you need it? Those are the kinds of questions that really help to drive what the investments are. That's kind of secondary, right?
It occurs to me down through the years that the Jones MO, the modus operandi, is to refrain from calling a client and say, Judy, I got this really hot stock looking really good. That isn't the way the Jones people work. They do advise. They're alert to opportunities and so forth, and make call and suggest something to a client. But they're not out on the lookout for something that's hot stuff.
That's not really our
not your
approach.
own. Yeah.
No. Typically, if I were to call a client to add an investment to a portfolio, it's based on their diversification, their long-term outlook. What do they need to help complement what they have? So, there's some great dividend-paying stocks that have been down in price the last couple of weeks. They're a good addition for some people, not necessarily everyone, but really going back to that goal and their risk and what's needed.
Well, if something is a real bargain today, you still have a risk involved somewhere along the line. Is that not true?
It's always a risk.
That's right. Yeah. That's right. But like I said, typically finding those sorts of investments that have paid dividends for many, many years,
right,
have a history of rising dividends, have a positive outlook. There's a lot of still really good values out there. The S&P is not really inexpensive. It's trading about 16.8 times earnings, which its average is about 15 times. So we're not on the inexpensive side, but we're definitely not crossing into the area where we feel like things are overvalued.
There are a lot of folks out there who are not really involved in the stock market greatly. You mentioned PR. Tell us about the price-earnings ratio and how important that is as you make an investment approach.
It's definitely one piece of the puzzle. The best way to explain it's kind of like the temperature. How expensive is it? How warm is the stock, right? Is it the price related to the earnings of the company? And so, like I said, the S&P is 16.8, which we consider to be kind of a perfect temperature. We're right in the middle. Once it starts getting up to kind of those higher low 21 numbers, we start saying that it's becoming a little more expensive. So some of the small and mid-cap stocks seem to be getting a little higher, but there's still a lot of really good long-term values out there. And I just constantly tie things back to that goal and what the long-term outlook is, because for each person that can be a little different.
You mentioned small cap stocks. Now, I understood at one point that they were definitely something for an investor to look at, the small cap, and I think that's very nice. I have no idea what I'm talking about. What is a small cap stock?
So those will be your smaller.
That's upper lower case.
Those are going to be the more, I mean, just think of it in terms of smaller companies. That don't have quite as large of a holding, right? So I often will show people we have in the office, we call it a jelly bean chart, and it shows all the little individual smaller sectors, I guess you could say. So small cap, smaller companies, mid-sized companies, large, bonds, all these different areas. And it shows this beautiful chart. I wish I could hold it up for you, but it shows which one's kind of been the highest performer year after year. And you would think if you showed that to somebody, you'd say, perfect, I'll figure it out. I'll know who's going to be the best performer next year. It's called a jelly bean chart because there is no rhyme or reason to the chart. It's different year after year after year. And so what you'll find is the place right across the middle of this chart's what we have talked about already is a diversified portfolio. It's not at the top, it's not at the bottom, but by picking a combination of things, we're able to kind of smooth the ride and be somewhere more in the middle.
Excuse me, honey. Go ahead. I just want to know. I just want to use the phone number. You and I have been so involved. We forgot to tell them the 648-5510. Somebody might have a question. Our guest this morning, Christine Short, representative of Everdy Jones Brokerage Firm. She's taken some valuable time out of her office, and we appreciate that. Now, Judith Kay.
When a person is a day trader, and I've only ever heard of one in real life before.
One real life person.
And what do they go after? Because, you talk about the stability of a person's portfolio, but a day trader, traders. So how is that benefit? Some of them get real rich.
Well,
yeah,
which would be nice. There is some money I could use, but how does that work for them long haul?
Yeah, like I keep using the difference in words, traders, or really what I would consider more of an investor over the long term. As a trader, you're basically looking at the moves in the market throughout the day.
Yeah,
you're staying at your keyboard.
Right, and making trades as prices fluctuate throughout the day.
Yeah.
We personally have so little experience with that on our end because it's just not our philosophy, right? Not that it may work for some people, but it's really not the direction that we recommend or use, especially for more of a serious long-term investor.
Well, that's like looking at commodities futures, and you can make a killing, or you can come up very, very, very badly. What about bonds? What's the bond market doing now, Christine? And where are in relationship to your advice on buying bonds?
I think it'll be interesting to see what happens in the next week or so with the Feds and short-term interest rates. As I said before, there's a real place for fixed income in a portfolio, even though right now it's tough to find something to get people very excited, right? When it comes to CDs or even short-term bonds, it's funny, I have some people that have, had investments for years and years, and they'll talk about the late 70s having CDs that paid 15% interest.
Yeah.
Think of that.
That ship has sailed.
Yeah. Right. Yeah. That's not happening.
Not so much.
Right. But there's still a real place for short and intermediate term bonds. Long-term bonds are probably not as desirable right now because of the possibility of an increase in rates. But to have some short and intermediate term bonds is still important to have. It's an important piece.
Well, what about these other avenues, like pension funds and mutual funds and hedge funds? You hear those terms all the time, but I dare say I don't. Said something else. I don't know what they're talking about.
A mutual fund is basically just. I refer to it as almost like a basket of several things in one. So they can have lots and lots of holdings in one little basket. So instead of you going out and choosing 200 individual stock holdings, you may kind of rope into one and have a professional money manager that manages that fund to decide who's appropriate.
And that answers the need for a lot of people.
It really does. It does. And a combination of stocks and bonds that can all be in one holding with someone overseeing that fund can be really beneficial to a lot of people. It's a good piece of the puzzle. But all those things are all tools. As I talk about the plan and putting all the pieces together, whether it be Social Security benefits, your 401k, your pension, all those pieces have to kind of marry together, right, to get to the end place.
The end result.
All those mutual funds and stocks or an annuity or all those other things are tools to get us there. And there's lots of choices.
What's old Uncle Ed say about foreign investing, Christine? The German stock or French stock or whatever, or in Bombay, whatever.
Yeah, and we, talking about China and some things like that, we do think there's some opportunity when it comes to companies that do business all over the world. As far as investing in, say, Chinese stocks, we're not recommending that, especially with the influence of the Chinese government that's done some things that were a little unexpected as far as some intervention goes. That
you're delicate.
That we're not recommending that you specifically buy Chinese stocks necessarily, but there's a lot of good international sorts of investments. A mutual fund and some things like that has some broad exposure is a good way to get some exposure without specifically going into China or Greece or those sorts of countries.
Yeah, now that's another question. Greece. What is that going to do to us? They're having a little financial trouble.
A little?
Yeah.
it's kind of funny because when you think about all the big headlines that kind of come and go,
Yes.
Greece is not that it's gone, but at the same time, you think back to just 2 months ago and the headlines were everywhere.
Yes.
And I think I read somewhere that Greece's economy is about the size of like Detroit. I mean, the impact is pretty minimal on the entire global picture. Another case I think of media definitely plays into kind of the individual fears I think people
really
have.
That's so true. And it depends on what news there is to put out there.
Sure.
How much you're going to dwell on Greece's problem. Yeah.
That's right.
Now, Joseph and Josephine Smith walking down Main Street in Beeson are not too aware of the fact that, not picking on Beeson, I take Burtonview as well.
My mom and dad live in Beeson,
No, seriously. The average person on the street is not terribly aware of the fact that, other than just vaguely, that China holds a lot of our indebtedness. We owe them a lot of money. How is that going to play out as the brokerage firms look ahead and down the road? That's a pretty deep question to ask a little girl on Broadway.
At 8:50 in the morning.
Yeah.
I haven't even drank a whole cup of coffee yet. I'm like halfway. I don't mean to just keep dwelling on this, but I feel it is so critical to think long term. I mean, when you look at, I have a great poster in my office that shows all the world events that have happened over the last, let's say 90 years. And the amount of things that have happened, the headlines, the wars, the all of these big events, the effect is usually fairly short term. When you're looking at a very long time horizon or a long picture for someone. So does China have an effect on us? Yeah. Sure, it could. And do I know exactly what that's going to be? No. I wish I did, but I really don't.
And if you did, you could hang out a shingle in gold.
Yeah.
I say often, I'm not a fortune teller. I wish I was. I wish I was. But our job is to figure out, what is quality, what fits into a person's plan, and to kind of squash some of the outside noise, because it's easy to get wrapped up in that. And I don't have an exact answer. I know that's kind of hard to, I don't. And I try to remind people of that. I don't know what's going to happen next week or next month, or if there's going to be some dramatic event that we're talking about in November or December, So we do our best to figure out what those quality companies are that we believe in, to prepare a plan that will kind of weather the storm.
And you have a lot of very sophisticated folks down there in the home office who sit there, and that's what they do all day long.
You're right.
Is study and make forecasts based on their in-depth analysis of this or that.
Absolutely.
I'd like to be really wrong about this supposition here, Judy and Christine, but my guess is that you don't have a lot of, quote, younger people walking through your front door to invest just by sheer nature of the economics of the times. They're so busy trying to slug it out and stay ahead of the game.
Yeah.
The average age of your investor would be?
I probably focus most on people in their early retirement years, but I do have some younger investors.
That's great to know.
And we talk a lot about the power of investing from the age of 25, and the power of putting some money in a Roth IRA every month, whether it be $50 or $100, something that they're able to manage. So I think that there's some real value in that. Obviously, the people approaching those retirement years are the ones who a lot of the times know they need some help.
Well, that's the thing. You see, when you're 25, I had no idea at 25 that I was ever going to be 76, for crying out loud.
Sure.
I was just trying to keep my head above water then.
You were too busy raising a family.
Well, yeah, I was up to my, what do you call it, in kids.
Yeah. Well, and, starting things like college funds for children. I have a lot of grandparents who help grandchildren get college funds started, and or gift things like securities, whether it be stocks or things like that, to grandchildren. And it's kind of fun to get to meet a 25-year-old that's been handed, some stock or something, or helping them to learn kind of the ropes early on.
Which is such a good idea. I don't think it's that the young people are opposed to this at all. I think that emotionally, intellectually, they just haven't gotten there yet.
And I think, too, it's a lot of encouragement by parents and grandparents, to help them figure out it's okay to ask for help on this, and let's get you started. It's not always a huge financial commitment to save for yourself, and save for your own future.
Yeah.
So.
We have just a couple minutes left, Mrs. Short. And again, Judy and I thank you for this last-minute appearance for us. Had we booked it a little earlier, you might have had a month to study out the issues. I would report that the last time I looked at my phone, it said, and I don't know how up-to-date it is, but the mark was up 390 points. I don't know at what point in time that is. Do you have any comment that you'd like to make, Mr. Short, in closing on an approach to investing in the market?
I think, talking about the market being up or down is just so true to what we've seen the last couple of weeks. Is volatility is here right now, and the headlines typically don't scream quite as loud when we're up 400 points as they do when it goes the other way.
Yeah, sure.
But at Edward Jones, our philosophy and our view is to look out over the long term and to figure out what those quality things are to help you reach your plan, reach your goal. And there's lots of tools out there to make it work.
We appreciate it again. And we realize, of course, that you'll be calling Jim Ash and Judy and I with any hot tips you have.
Yeah, there.
We always try to close the program with a quote or two that's analogous to the subject matter of the day. I've got two this morning, Judy, because in looking for a quote, I found this one, Joe Biden.
Oh, almost a candidate?
That's really his thing to do. Anyway, now mind you, when Franklin Delano Roosevelt was president, and the relativeness of TV at that time didn't exist,
Right.
So Joe says, when the stock market crashed, FDR got on the TV. Talked about, so that's it. I'm not going to say further comment about that. Okay, one of the funny things about the stock market is that every time somebody buys, another person sells, and they both think they're astute.
Yeah.
Thank you, Christine Short.
Thank you for having me.
No.